What's up, everybody? Welcome to another episode of Hidden Forces with me, Demetri Kofinas. Today, we speak with Anne Stevenson-Yang. Anne is the co-founder of J Capital Research, which conducts ground-up primary research for institutional money managers on equities and the Chinese economy. She is the former co-founder of Blue Bamboo Ventures and also founder and operator of the CRM software company Clarity Data Systems. And she is the creator of 66 Cities, a publishing company whose flagship magazine is City Weekend, one of the highest circulated English magazines in China. Anne first moved to the Middle Kingdom in 1985, making her family and home in China for the next 25 years. She is the author of China Alone, China's Emergence and Potential Return to Isolation, a subject that we will cover in depth today. In this episode, we take a trip to the other side of the world, to the land of China, the territory that 1 in every 5 people calls home. Our conversation concerns itself with the contemporary changes in Chinese society that came after the death of Chairman Mao, beginning with the ascendancy of Deng Xiaoping, the architect of a new brand of thinking that combines socialist ideology with pragmatic aspects of market economics that the Chinese have called socialism with Chinese characteristics. What changed in the 10 years between the beginning of these economic reforms and the events in Tiananmen Square? And how did the Chinese government's reaction to the uprisings in 1989 alter the opening of Chinese society? How did the Chinese response differ from the Soviet reaction in the same year to the fall of the Berlin Wall? And what has set China apart in its path of development since? Some have called it a miracle, and by any measure, it has been exactly this, the Chinese miracle. The size of the Chinese economy has increased more than 25-fold in the last 25 years, from 6% of U.S. GDP in 1992 to 60% today, an accomplishment that defies all principles of economic gravity. Loan growth in China has averaged 16% in the last 20 years, reaching an all-time high of 35% of GDP in June of 2009, amidst the greatest economic contraction the world has seen in almost a century. Total debt in China recently surpassed 300% of GDP, making Western finances seem frugal by comparison. In the first 7 years since the financial crisis, bank liabilities in China grew by nearly $15 trillion, the near equivalent of the consolidated size of all U.S. commercial banks. China has used more cement in 3 years building and overbuilding than the U.S. did in all of the 20th century. Hundreds of thousands of meters of unsold residential real estate the size of Singapore, massive industrial overcapacity, ghost cities by the hundreds. The Chinese economy is in terrible need of a recession that it cannot afford, but one that it cannot avoid. How will the citizens of China, its trading partners, emerging markets, and developed economies react when the reckoning finally arrives? And how much longer can the Chinese government continue to postpone the inevitable? As always, you can gain access to reading lists put together by me ahead of every episode by visiting the show's website at hiddenforcespod.com. Lastly, if you are listening to the show on iTunes or Android, make sure to subscribe. If you like the show, write us a review. And if you want a sneak peek into how the sausage is made, or for special storylines told through pictures and questions, then like us on Facebook and follow us on Twitter and Instagram at Hidden Forces Pod. And now, let's get right to this week's conversation. So, Miss Anne Stevenson-Yang, thank you so much for coming on the Hidden Forces podcast. Welcome.
Well, thank you. And just Anne is good.
Okay, Anne. All right. So, Anne, before we begin, our listeners should know, and maybe you can clarify for me as well. Now, you have lived in China for the last 30 years. Is that about correct?
Yeah, people keep adding on for me, but yeah, that's about right.
It's about right?
Yeah.
You've raised your children in China.
That's right. The second one was born there.
Your husband is Chinese.
Yep.
And you speak fluent Mandarin.
Yep. Always trying, but I would call it pretty fluent.
And what is your background besides that? I mean, what did you start off with? I mean, how did you find your way in China, and what is your background?
I'm a mutt. I started out as a journalist in New York And I just floated over to China because I thought I was actually politically interested in what was going on at the time. And I got offered this job at the Chinese government foreign languages press. And I thought, why not for a year? That will be fun.
When did you leave?
That was 1985.
85, wow.
Yeah, so I met my husband there, got married, and then just the growth of the Chinese economy kind of sucked me back. So I would say I'm an economic migrant.
Very adventurous of you. Why did you choose China specifically? Because you found what was going on there politically interesting, or had you studied the country for a long time?
Okay, well, this is really embarrassing, but this is my age, right? So I grew up in the 1970s. Mao Zedong was a hero. We didn't really know that much about China. You know, I went to a parochial school. I had a copy of the Little Red Book in my blazer pocket. I thought, this is finally the version of communism where they understand the peasants, right? I know it's really embarrassing, but I thought that this was a model that would work, and I wanted to see it. So when I was actually working a night shift at Business Week on the desk in New York, and I had a break, so I went out. I went to China Books and Periodicals, which existed then. I bought all the magazines, and I wrote to them and said, I want to go work for you, and then I forgot about it. But one of them sent me a telegram like 6 months later, so I thought, why not? Yeah, telegrams existed then.
That's exciting. Very exciting.
Yeah,
wow.
It was kind of...
And how long after you moved to China did you meet your husband?
Well, we worked in the same building, but I wasn't really aware of him until we got sent... Okay, you really want to know this?
Sure.
In 1987, there was a county in Jiangsu province that was growing fruit trees for the first time, and they'd gotten sort of relatively rich, and they wanted propaganda about this. So they invited, so-called journalists from Beijing to come and visit. And so I was sent with my interpreter, and the guy who worked at our magazine, the Indian guy, was sent, and he had his interpreter, who is now my husband. He was a Hindi interpreter because he'd been in the Chinese army and had been trained in Hindi to be in the army on the border with India. So we spent 3 weeks together traveling around Jiangsu, going to communes and, learning about tea growing and, congratulating people on their factory accomplishments. And then, I don't know, we just got married.
The rest is history.
Yeah.
All right. So, well, then let me ask you, what's going on in China?
What's going on? Basically, in China, every man, woman, and child, government, private, dog, cat, is focused on trying to make sure that the Chinese economy rises in value, that prices rise, that assets stay high and rise, and that there's enough stimulus to create growth. That's the maniacal focus of basically every human being in China right now. Not on value, not on creating something new, but on making sure that asset prices stay high.
So what is the timeline of events that have sort of raised concern for people in China? Because there's something else that, I've picked up on, which is usually I like to cover subjects that are controversial, aren't necessarily consensus. But I feel like the case with China is one where there isn't much controversy around the idea that there is a bubble in China. Certainly, I've been hearing about a bubble in coastal real estate for like 10 years or more. This isn't something where many people are going to come out and say you're a whack job for saying this, or you're crazy for suggesting that the hard landing in China is a possibility.
That's true, but it's fairly new. I would date that general apprehension from summer of 2015. So prior to that, you were pretty much a heretic if you didn't believe in the ever-growing value and strength and emergence into the sunlight of the Chinese consumer and the Chinese economy. But what happened in 2015 is, number one, the Chinese stock market crashed. And in spite of the Chinese government's insistence that they would hold the stock value at 4,500, it went down below 3,000. And the second thing is that the renminbi devalued by 3%, and that shocked the world. And it indicated that the Chinese government, in fact, is not in control of the whole economy, which basically the Western world believed.
You mentioned the first part, why was it shocking? But why did the renminbi crash?
Well, it didn't crash. It declined by 3%, and that was just really because the PBOC, you have an offshore renminbi and an onshore renminbi, and the offshore renminbi was trading at a premium or at a gap, with a gap. And that's not legal under IMF rules. And China very much wanted to become a reserve currency for the IMF. So they decided, okay, we're just going to close that gap and we're going to depreciate the onshore RMB by 3%. They didn't realize that all hell would break loose.
The offshore RMB is for the tradable goods sector, right? There's like one currency for the service sector in China and one. What is the breakdown there?
No, the offshore RMB is really quite small. It's just sort of China testing the waters to try to consider whether they might make the renminbi convertible at some point. They've actually retracted the offshore renminbi quite a bit since that time. At its height, I would say there was, I don't even remember the numbers, but let's say 3 trillion renminbi offshore, one place or another, which is really, if you think about it, quite small.
Right. There is some sort of currency arbitrage discrepancy between certain class of people in China and others, right? I mean, from what I understand, there's one market for the vast majority of people when it comes to exchange and then for another part. Is that incorrect?
Well, there are people who have access to renminbi offshore. If you have an account in Hong Kong, or if you have export earnings, or for some reason you're exposed to the international economy, then you may have access to offshore renminbi. So to that extent, you may have more window on the foreign economy than the average Chinese person. Otherwise, it's really just who has access to hard currency, dollars, and who doesn't.
Okay, so let's begin at the beginning, which is reform in China. Because I'm fascinated by this, reading your book and preparing for this interview. It put me into a place of thinking about the Chinese economy and the Chinese political system in a way that I never had before. Because we're used to, certainly I am, to this China of the post-Cold War. But of course, there was a pre-Cold War China. And reforms did not begin after 1989, nor have they ended. What has that process been like in China? And where can we sort of pinpoint some of the most significant turning points?
It's an interesting question. Reform is a word that we attach to essentially all government change in China since 1979, when Deng Xiaoping began the current program of opening. And I think that in the West, we graft onto that word the idea of increasing liberalization and openness, when in reality, that's not really what's behind it. But I think the way we should look at China is 1979 to 89 and then 1989 on. So 1979 was when Deng Xiaoping essentially walked out of prison and into Zhongnanhai, the leadership compound in Beijing, and became the government leader and began to liberalize China in a whole lot of unexpected ways, allow people to stop, if they met their quotas for growing grain, for example, then they could begin to grow cash crops and sell them, allow people to have some private markets, allow people to start taking over bust factories and run them for profit as long as they paid off the debts and paid the workers, things like that. And the country really blossomed in a lot of ways. And then you came up to 1989. So essentially what happened was that this really worked very well. People got a whole lot richer. In many ways, it was confusing, but it was also exciting. There was a lot of cultural opening, whereas in the past it had been impossible to listen to Western music or read Western newspapers or wear Western clothes. All of a sudden, these things were coming in. There was experimental theater. There was what they used to call disco dance. There was art. There was all sorts of stuff. There was Qigong, which is a type of sort of quasi-spiritual physical exercise that became very, very popular. And all of this led to a sort of almost chaotic opening and to a concurrent demand for more rights, more political rights. And it culminated in 1989. And as we know, we all know what happened in 1989. And 1989 was followed very quickly by the breakup of the Soviet Union in 1990. And essentially what happened was that the Chinese central government grew terrified that China would go the way of the Soviet Union and would crack up. And so they prioritized re-centralizing the apparatus.
And when you're talking about 1989, you're talking about Tiananmen Square. We know that the government cracked down heavily on the society after that, after the uprisings. But is there much information that is available? Because I know in China you can't get much of anything, right? Even if you Google Tiananmen Square, there's nothing there.
Yeah, of course. You can't get a lot of information on what precisely the crackdown consisted in. There are very wide-ranging estimates on how many people were killed, how many people incarcerated. But I think for my purposes, what's really interesting is what happened in the years culminating in 1995 thereafter, where China changed its tax system, it changed its customs, it changed the way local governments manage their budgets, it changed really, personnel appointments within the party in order to arrogate more power to Beijing. And they did it in a very clever way. For example, under the old system, localities, provinces would have a negotiation with Beijing every year and decide how many taxes they would pay to Beijing. So what Beijing did was they went to the provinces and they said, look, you're paying us, let's say, 25% of your whatever gross national product of Shanghai every year, and that's, let's say, $100 million. So let's fix your payment at $100 million. And what we're going to do is we're going to impose a VAT tax and an income tax, and Beijing is going to collect all of it and then rebate to you the portion that's due to you. So initially, the localities were fine with that because the cost was the same. Over time, it became very unbalanced, so that the lower the level of the government, the less money you had.
So the government made a deal with the people, but was that sort of an explicit offering that the government did, that they said, look, not in these exact words, but leave us in power and we will reform certain parts of the economy that many of you had wished we would in order to expand economic growth? And what was sort of the conversation that happened internally in the country around that cataclysmic sort of event?
Well, I think there's a little bit of a misunderstanding embedded there. A system like the Chinese system is not concerned with what people think. The interlocutors are not individuals. The interlocutors are entities, state-owned enterprises, and local governments, and those are the constituents for the national government and the people they have to talk to. The individuals will follow. So what the central government did, it was a process of negotiation, not one of strong-arming, although it was pretty clear who had more power than whom. So the central government would go to the localities and negotiate over tax authority, negotiate over appointments authority, and gradually, they pulled more budget authority and appointments authority up to the central government so that they would have control.
Is there any comparative framework in the United States that would help us to understand the functioning of the Chinese state?
No, and I think that that's very important because we tend to think that it's similar. There's a national government, there are provincial governments, there are local governments, but it's a unitary system. It's not a federal system. So, for example, local governments don't have the authority to make their own budgets, to collect taxes and make their own budgets. That's the chief reason why we've got this huge property bubble, because local governments are stuck with the tab for schools and hospitals and roads and bridges and water processing and all that sort of thing. And yet the money trickles down to them from the center, goes to the province first and then to the city level. And then the prefecture, there are 5 levels of government in China. And so the prefecture at the bottom is stuck with all the costs, and yet it doesn't have the right to, keep most of the revenue. So what can they do? They had to raise money through debt.
Wow. How would you compare it to the Soviet system pre-1991, pre-1989?
I don't know enough about the Soviet system to be able to tell you. Let's just say that the Chinese system they're very, very different in a lot of different ways. The Soviet Union was and is a petroleum state, so they have a lot more natural unitary organization to their government. And also it has radically lower population, 130 million or so, compared with 1.3 billion, with a territory that's much, much larger, and tributaries, rivers and a few railways that connect all the key cities. So that's very different. The kind of power that you can exercise over Russia and the former Soviet Union is very different from what you can exercise over China.
Right, and the research point being important, which is that the Soviets would be able to raise living standards by selling natural resources with greater ease or commodities than the Chinese, who needed to build, for whom building an industrial economy was much more important. I suppose you're suggesting.
I think that's true. Also, the Soviets would be more capable of using repressive power to control their public. The Chinese, that's true out in the less populated areas in the far west, but in the densely populated areas along the coast, that's not what's going to fly. What's going to fly is raising investment capital, because in a place where you have, let's say, 30 million people living in a fairly dense area, to build a road or a bridge raises economic performance very rapidly, and that creates unity and support.
And that brings us really to the crux of this conversation, which is debt. Because debt and the financial system is the mechanism through which you can exercise control over people in a non-coercive manner.
Yeah, I think that's right. And I think it's there's some brilliant person named Goodhart, I can't remember who it is exactly, who said that
Goodhart's Law.
Yeah, Goodhart's Law, exactly.
I wrote that right here, actually, to begin with for this conversation, because I felt when a measure becomes a target, it ceases to be a good measure.
Exactly. Great minds think alike.
I thought to myself, that sounds like a Confucian saying. But I think, I wrote that there when I was thinking about this conversation. I kept coming back to that, which is that the Chinese have an obsession with numbers, with hitting targets. And I was astounded when I looked into this fact further. I mean, one of the things has to do with the measure of GDP in China. Analysts were not trusting the GDP numbers. They began measuring electricity. I'm telling you things that I'm sure you know. And that in short order, it turned out that the Chinese government was encouraging contractors and builders to leave the lights on in these places in order to present false figures of electricity consumption.
Yeah, it's not even that complicated a lot of the time. A lot of the time you simply, invent the number that you need. And this is important to remember about GDP and so many other numbers in China, that these numbers are organizational tools and targets. They're not calculated results of a data set, whether or not you distort the calculation. The point is you use something like GDP to mobilize people and to indicate what production levels should be. And if you were to drop the GDP target, it's a self-fulfilling prophecy.
And they have pretty much relied on that number as their sort of prime point of national pride, and as the sort of calling card for the entire point of their existence as a sort of a legitimate authority in China. I mean, that seems to be so connected to their legitimacy.
Yeah, you could say that. And I think it has a couple of purposes. One purpose is that organizational purpose. So your principal constituency, if you're the Chinese government, are state-owned enterprises. And state-owned enterprises make their budgets with reference to the GDP target, and they receive their investment capital with reference to the GDP target. The GDP target is measured against historical industry performance next to GDP, and then you sort of do a calculus and you figure out how much investment capital this company should get. So they're required to use that when they make their budgets. So on one hand, it's a campaign tool. On the other hand, it's an external messaging tool for investors. So incoming capital investment and portfolio investment, whether it's FDI or portfolio, is very, very important to the Chinese economy. How are you going to get capital investment if your economy is only growing, say, 3% and Brazil's is growing 5%? So you got to show growth that outstrips other developing countries.
Is there FDI's foreign direct investment? Is there a lot of foreign direct investment? I mean, there's so many aspects of this, and that I want to get into. And hearing you talk, I'm trying to figure out how to get in without getting lost in the weeds. I mean,
sorry.
No, you're not. Don't apologize at all. I'm. In fact, I feel like this has been an overwhelming task for me to try to figure out how to come in here. But there are so many interesting aspects of this, one of which is the extent to which the Chinese boom has been led by domestic savings. It seems from my research that it is even more than it was the case in the Japanese boom. The Chinese boom has been largely fueled by domestic savings. Is that correct?
Yeah, that is correct. I think it tends to mislead people by leading them to think that it's all about thrifty individuals storing their money in the bank, when really it's just a measure of the amount of capital domestically as opposed to the amount of capital washing over the shores. But that's true. China pulled off really quite a remarkable feat, which was to increase its investment. I think you noted that simply the increment in bank assets in China between 2009 and 2013 exceeded the total bank assets in the United States.
Yes.
This is an economy that's 40% larger and that's been building its bank assets for 150 years. So it's a remarkable number. As they were doing that, generally speaking, as you increase your investment to that degree, you're going to depreciate your currency because you're expanding the pool of currency, right? But China actually has the command and control ability to build so much stuff that it could actually increase demand for investment even as it was investing so much money. So the currency was appreciating. Returns on investment domestically were rising very high. It was attracting
it's
hot
a Ponzi
capital.
scheme. That sounds like a Ponzi scheme to me.
Yeah, you could put it that way.
I mean,
so,
it certainly does. The focus, I mean, then I say it, and here are a couple other numbers I've got for you. The total amount of concrete used between 2011 and 2013 in Japan far exceeded. I've got the numbers here. It looks like 4.5 gigatons was what the United States used for 100 years between 1901 and 2000, and 6.6 was used by China for just 2 years. Does that sound right to you? And about close to 50% of the economy is construction. Less than half of the economy, slightly less than half is construction. Is that also right?
I think that that's an exaggeration. I would put construction and real estate at about 20 to maximum 25% of the economy. It's not really fair to count all building materials because they also go into ships and automobiles and other sorts of things. But it's very significant. As for the amount of cement, yeah, I've heard that as well. It is phenomenal, and you know, it's taken a very severe toll on China's natural environment. Eventually that will end, but one hopes it will end sooner rather than later.
On the thing, to bring it back a little bit, you were talking about the growth of bank assets, and I think you said from 2009, I mean, that was the number that I had found as well, from 2009 to recently, the amount of assets generated by the banking sector, in other words, a reflection of the growth in liabilities, was the total amount of U.S. bank assets. It basically is a reflection of loan growth, and that suggests a great amount of malinvestment. It suggests it without proving it because it's very difficult to expand that type of credit, in particular in the face of an economic contraction, which is what the world was experiencing globally at that time. I mean, things like that about China alarm me. And again, I speak very humbly because I'm, unlike you, I do not live in China. I don't know the country. I don't speak Mandarin. But just on the very high level, it seems to me to defy every sort of principle of common economic sense.
Well, this is the thing about China, its tremendous size and its centrality. So China can create, growth phenomena that exceed anything the world has ever seen. It can also create disasters that are greater than the world has ever seen. And it's important to remember that it's not just the bank assets. Because the central government was really panicked to pour investment into the economy and to avoid the downturn that the rest of the world was seeing. But they were also committed optically to sound banks with good bank assets. So they had to create a shadow sector that became far, far larger than it ever had been before. It had been something like 5% of the financial system. It grew at the height to 55% of the financial system. And that's really because you insist on having banks that are making prudent loans. And yet you need 4 times as many loans as prudently can be made. You create a shadow sector, the banks buy the loans back, and then everybody's happy.
How does that shadow sector operate? Are you talking about the SEOs?
Companies like the trust companies, shadow makes it sound sinister. It's not sinister. It's like brokerages, private equity funds, public equity funds, trusts, all sorts of non-banking financial institutions. But what essentially happened from 2009 was the governments wanted more capital than the banks could lend with any reasonable prudence. And so what would happen is a trust would lend the money. Like, you're a developer, you're very risky, we're not really sure what's going to happen, but you'll pay 9%. So I'm the trust, I'll lend to you at 9%, and then I will sell that loan to the bank tonight, and I'll give the bank 7%. So I keep the 2% spread. It's on the bank's balance sheet. I don't have risk, and then I do it again tomorrow.
Yeah, I mean, it's something similar in the United States with the CDO market and the sort of disintermediation of loans and ownership and everything else.
Yeah, in a sense, it's like that.
Yeah. So where are we today? sort of, what does the picture look like? I mean, you mentioned 2015. What was the drop there? About 2/3 of the Shanghai Composite?
I think it was 40%, maybe,
I have
maybe
it
45%.
Reversed. I have it reversed. Okay, so about, close to half, the market collapsed in China. So what have we seen since then?
Well, essential stability for the central government and its deputies spent trillions of RMB supporting the Shanghai market value to make sure that they couldn't quite pull off 4,500 for the index, but they pulled off 3,000. So it's been hanging out at that level. And they've been keeping all the debt rolling over. So you essentially have a situation where China, the return on capital invested just goes down every year. So in the best of circumstances, you have roughly 7-to-1 ratio for investment to GDP growth. So you have to invest 40% of the economy to get a 6% 6 to 7% GDP growth.
That's a reflection also of the inefficiency of the deployment of the capital.
Exactly. So you figure that if you put it in really simplistic terms, you figure that GDP growth should be roughly on a par with lending growth. So if you were to bring lending growth down to 6.5% or so of GDP, then you would see GDP growth of 1/7 that, so no more than 1%. So that, you figure, is where organic GDP growth is now.
So in other words, to say this is basically the Chinese government is committed to a certain growth rate. It has political reasons for wanting that. These are real people in positions of power who want to maintain their position of power. And the way that they're attempting to do that is to continue to force an otherwise unsustainable situation to go on a bit longer.
Yeah, that's right, because you have a situation where, nobody wants to put their hands on that tar baby. So everybody has the intellectual realization that it's not really a good thing, that the quality of life for the average Chinese person has declined, not improved, that education standards, health standards, environmental standards, all of those things are not improving, even as GDP growth rises.
That's something I actually wanted to ask you about, because we see video footage from China constantly. And we see people with smartphones snapping pictures. We see lots of lights. We see all these buildings. And it's impressive. But it's something I often wonder about, which is what has been the improvement in the quality of life in China over the past 30 or 50 years, when measured in sort of in the total sense of that word, given the pollution and given the urbanization. I mean, the fact that people have moved from the rural parts of the country, this mass migration, which is also really remarkable, the fact that hundreds of millions of people have actually migrated, physically moved through that country, it speaks again to the power of the Chinese state, which is pretty remarkable and I think difficult to comprehend as an American. But really, what has been the real improvement in the quality of life? Where can we see improvements in quality of life, and where can we not see that, or have we seen a decline in quality of life?
Well, there's significant improvement via the better communication system, the fact that there's an internet, that there are smartphones that are universal now. The roads and the transportation networks are phenomenal, and that greatly improves the quality of life. But as to the other things, yes, you can replicate the hardware. I mean, I'll give you an example. I've been to 3 replica Manhattans in China. One of them quite large, and 2 others kind of smaller, but still replica Manhattans. I've been to a replica Hong Kong. I've been to a replica Venice, although they call themselves Florence. Are
these replicas? How do we think of them?
No, it's not like a toy. It's the real thing.
No, I know, but I mean, okay, this is why I asked that. It's astounding. I've seen the replica Paris. I mean, that to me looks like a full-blown town or city.
Right.
Is that what it is?
In the middle of Anhui, yeah. And it's sort of...
What is it for? And in other words, I'm trying to understand, like, is it the equivalent of a suburb insofar as, like, it's another community with a town and sort of people that can commute from there to other work? Or is it itself supposed to be? I mean, what is the...
But see, this is the point, that you can replicate the hardware, but it's not the same thing as having the original.
I cut you off, but I also want you to, if you can address at some point this, which is... Do they have any idea what they're doing? Does the leadership, are they just sort of because we see this all the time, we wonder, right? People ask that about Bernie Madoff. I'm not drawing a direct relationship, but for me, personally speaking, there is a Ponzi aspect to this. And I think there's just a point in which you're in so deep that you just hope that you can keep it going before you die.
Yeah.
Is that sort of what the dynamic is in China?
Yeah, I think Bernie Madoff is an apt comparison, not to say anything about the ethical quality of Chinese leaders, but, you start out by thinking, well, isn't this a great thing, all this portfolio investment we can capture from overseas if we just pretend that China Mobile is a real company? We sort of paste together all our post offices and call them China Mobile, and we'll list it, and we'll gain $1 billion. That's a great thing. And then over time, you get caught in it. And so now they're in a situation where if they don't continue to reinvest and to raise the amount of investment capital, then a whole lot of credits just go bust. And nobody is willing to accept the consequences of that because nobody knows how far systemically it will go.
Well, how far systemically will it go without knowing exactly? I mean, what do you think?
It is really tough to say. It's really tough to say.
Why?
Because there are so many contingencies and dependencies and so many things we don't know. But let's take one company, Evergrande, which is a company I love to hate. There's a real estate company that has projects in 170 cities, probably has 250 projects or so.
Ongoing?
Not all of them ongoing, some of them completed, but almost none of them occupied. All of them, mostly all of them sold. And these are projects that specifically are pitched to the Chinese aspirational investor. So they're not supposed to be places you really want to live. They're supposed to be places that you buy because in some mythical future, there will be wealthy people who will want to live here and commute to their wealthy jobs in their wealthy cars, and you'll sell your unit to them for a lot of money. Sounds
like Vegas.
Yeah, but way bigger, way bigger. All of Vegas would fit into one Evergrande development. It's just like totally, or let's not even pick on Evergrande. Let's just go to any sort of interior city. There's a city that I've been to called Shiyan, which is in the, in Podong, Hubei, way off in the west of Hubei province. And Shiyan, for complicated historical reasons, it lost its core industry, so they were in a panic to invest. So they invested in all this real estate. There's one real estate company that actually tried to recreate Niagara Falls. And Shiyan is in the mountains. There's no water. This is in the mountains. They actually tried to dig Niagara Falls as a sort of ornament to the real estate development. There's a development in Yunnan where they dug a 150-kilometer canal so that they could have a moat around the 5-star hotel in the development. Just like totally loco things. But what happens is you have to finance these things, and the ultimate, as you finance them maybe originally with bank loans and then with shadow bank loans, but then generally over time those things get securitized and sold to the general public, and it runs like a river, like tributaries all over the country. So you really don't know which grandmother in which small town owns the security that will go bust if Niagara Falls is never built. And you just can't take that on. How are you going to deal with that? Because the guy who sold her that security might well be a government official in that town. And how are you, as the provincial government or the central government, going to say to her, oh, that, we didn't mean that. That wasn't us. That was him. That's that's on you. You lose all your savings. You don't have a pension. Sorry, lady.
So a few things I'm thinking about. When you talk about the Niagara Falls, I thought about the fact that I discovered recently that there is a mock Dubai in China. Are you familiar with that?
No,
mock
which
Dubai
one is
city.
that?
I'll find the pictures. I'll show it to you. I mean, unless this is fake news, but
everything can happen there.
And to me, that sort of signified that, because for me, Dubai is
Dubai is already mock Dubai.
Exactly. They're building fake islands. It was, in fact, in the center of the city was the fake island Dubai sort of palm tree.
Oh, I know where you mean. Beihai.
Okay.
Yeah, that's way down in the south.
Talk about a derivative. Talk about really going, I mean, that to me reflects, that's wild. So I think that's fascinating, right? Because it's one thing to replicate Venice and to call it Florence or whatever, and it's a whole other thing to replicate a replica. That's how meta. Anyway, but the other thing, again, you're talking there, and this is something that I've spoken about for years. It's not even just something recently, but I did speak about it recently in a conversation with Mark Faber. Well, although I don't think I expressed it explicitly, which is, I find that the use of debt and the financial sector, in particular in China, specifically in China, is very much meant to coerce through other means to get these people to work way harder than they would otherwise work, with the expectation that they will be able to reap the rewards that are sitting in their savings account. But those savings that they experience as being theirs are not actually theirs. They are the state's, right, to do whatever they want to with.
I mean, that's a particularly harsh way of putting it, but you can certainly say that the Chinese government is very focused on capturing savings and retaining them within China for these mad projects. So, wouldn't it be nice if a Chinese person could instead, buy a mutual fund overseas and, eventually, I don't know what, send their kids overseas for education? People do that, but it's a very small proportion.
Well, I guess what I mean is, and I definitely want you to correct me if I'm wrong here, I guess what I'm thinking is there seems to be no respect by the financial sector in China for the savings of the people that are putting the money there. It seems that they feel that they can wield that for investments at their will.
Well, they can, because there's a universal backstop, right? So
we have that here in the
is...
U.S. as well, but there is the pretense that it's your money. I mean, that pretense seems more specious in China.
Well, we sort of do, but losses are borne by investors here, and they're really not borne by investors in China. In small places where you don't hear about the people, like, a bunch of people who invest in a private P2P platform in some, locality, sure, those people lose. But if you go to your bank and you buy a wealth management product that's actually not sold, but, it's sold by the bank, but it's not the bank's product, maybe it's some dodgy coal firm that actually went bust 2 years ago, you're not going to lose on that because the government won't let you. So all of the investment managers know that, and they take risks accordingly.
Do you spend any time thinking about, I'm sure to some extent you do, the context of China within the global economy?
Sure, of course.
Yeah, it would make sense. I mean, I'm just throwing it out there because we were so bogged down here in China itself. But what do you see as the effect of Fed policy, for example, and any type of contraction in U.S. GDP, or if we have any kind of recession here, what would be the knock-on effects in China and, emerging economies, and how does that all sort of play itself out? Because at some point we're going to have a recession. There's nothing wrong with it. It's a normal, healthy thing to have recessions. And the Fed is supposedly trying to raise interest rates and contract the size of their balance sheet. If they continue to go down that path, there is, of course, the dollar carry trade. There are many things that can impact a company like China. So what is...
it's interesting that you call it a company. I wouldn't argue.
A country. No, did I call it a company? Yeah. It might have been a Freudian...
I mean, that leads to a lot of inestimables. So will the Fed really raise how many times, and will it really contract its balance sheet? We hope so. But as the United States demonstrates, once you have a fiat currency, it's very, very tempting to use it to fund all sorts of liabilities, and we have plenty of liabilities going forward. So that is really the biggest question for China. If the U.S. dollar does strengthen, then China is cooked. But if the United States relents, turns around, and puts more cash into the world economy, then you could have another, I don't know how long, of this in China.
You ever think about how the Chinese government would react if, in fact, they lost control of the economic levers, or really not able to hit that target and unrest began to come out? And I say that why? I say it because, again, looking at the history and thinking about the totality of, the decades that have preceded this, and also the way in which the Chinese government and Chinese society tends to think of itself in much grander, sort of larger scale terms, would it be an exaggeration to imagine that the Chinese government may turn inward in a much more repressive manner than anything we've seen for decades?
I think it will certainly try. I think that we've already seen that going on for the last several years. The attempts to constrict the capital account and make it harder to get money out, the attempts to control the internet with much greater force than was true in the past, the really almost complete lack of cultural sort of development and, exchange. Really, the only cultural events that are available in China are the big international events that come for a day or two, but there's really no room anymore for the development of Chinese arts. And, for people to gather and exchange ideas politically has become much harder than it used to be. So I think we've already seen that happen. Could they go back to 1975? I don't know. I mean, certainly that will be the preferred path of the party rather than dissolution, but there are many other paths that could be taken, and it's impossible to know which one will be more likely.
Do you ever imagine how long this could go on for further? In other words, how much longer they can maintain this sort of illusory growth?
Well, I think that question is really the Japan question. Can you keep putting money into the economy to keep the debt rolling over, never recognize the debt? What happens to the economy in those circumstances? In some sense, that's been already going on since 2011. And you see it in the sort of decline of spending power domestically of the average Chinese person and the decline in sort of the standard of living. But there's a key element that's still needed that Japan went through that China has not gone through, which is a significant depreciation of the value of assets. So if the Chinese government is willing to see the Chinese people see their apartments go from, 100,000 a square meter to 20,000 a square meter, then yes, that could happen. You could have a long, long, long grind. But I think that that's not very likely, and I think much more likely China is going to hit a wall. The currency will suddenly depreciate, and assets will drop much faster than people would like.
And they've never seen that. The people that have seen appreciation in prices in China, they've never seen a price decline before, right?
The property market has only existed since 2000.
Right.
So in reality, it's one generation. And also it's, despite the phenomenal, construction and development of commercial property, the proportion of Chinese population who really live in the commercial property economy is kind of small. There are a lot of people who own these apartments, but most people have either rural dwellings that they inherited from their parents in one way or another that don't really belong to them, but they have the right to live in, or urban apartments that came from the work organization of themselves or their parents.
Let me ask you this about the real estate. You touched on it a little bit before, but what is the mechanism through which, because the way I understand it, the real estate market in China is particularly inflated due to the fact that it was one of the early parts of the economy to be liberalized, right? Liberalized, to be privatized, rather. And there's some weird mechanics and dynamics around who can have property, what type of property constitutes investable.
In a technical sense, all the land is owned by the government. So the major distortion is that land is owned by the government and local governments on the local level. And so the government has a key interest in high land values.
How does that work? Let's say if you're in China and you want to own something, how does that work? I still don't understand it.
The governments issue leases on the land. So you get a lease on the land for 20 years, 40 years, or 70 years. Most residential property will be 70 years. And then you own the building that's built on top of the land. But the government will have the right, theoretically, to take back that land at the end of the lease. It hasn't happened in most localities. In a few it has. A couple of them have tried to impose new fees, and the people who own the houses got really upset. They retracted it, or they imposed much lower fees. It's kind of a negotiation.
So there's a quality like eminent domain, but it's obviously much more engaged.
Yeah, that's right. So that's the chief distortion, is that the government's on the land, but there's also types of property rights. Basically, every long-term urban dweller in China owns an apartment in one way or another, but that apartment very likely may not be saleable because of the different shades and gradations of rights that are attached to that apartment.
And so I'm not going to push you any more about making projections. I mean, I'm curious. To me, I'll tell you another reason why. I have many friends who are very pessimistic, as I have been for a very long time, on the U.S. dollar and on the U.S. bond market and et cetera. But I don't see that being a problem anytime soon. Because when I look at countries like China, or when I look around the world, I still feel that in the next crisis, the U.S. bond market would still appear rather attractive to a lot of people. And another great example, as you mentioned, this question around property rights. The Chinese citizens don't have a Bill of Rights, right? They don't have the same right over their property that we do, and so that is sort of reflected in a way in the capital flight that's leaving the country, right? I mean, they know, many wealthy people who have made a lot of money in China know that they're not necessarily going to be able to keep that money, and they're looking to get it out, right?
Yeah, I think that's right. And I think that that's a key and underappreciated point, that everybody, remember all the columnists who, starting from 2009, were warning about the U.S. dollar and how we were going to induce this terrible inflation and the U.S. dollar wasn't going to be... Well, that hasn't really happened. You don't see Americans trying to buy assets overseas or trying to emigrate. And that's because, in the end, it's about the degree of trust in the government, and it's about the quality of life within the country. And on a relative basis, the U.S. is still looking pretty good.
Yeah, relative, exactly. That's the key.
Relative is key, right? That may change with the current political situation.
Right. And though we've had inflation, certainly in asset prices, that can quickly turn to deflation. And we've been fighting deflation, or the Federal Reserve and central banks in the West have been fighting that with their monetary policy.
Yeah, that's right. And probably with less effect than they really think.
I would say...
Yeah, I'm not sure we solved anything, but...
No, I mean, I was trying to basically... I wanted to see if we could try and sort of create some hypothetical scenarios here about where things would go. I mean, there's so many factors. There's so many variables. There's North Korea, of course, which is a big variable, and our president is another variable. A walking and talking and tweeting variable.
I'm trying not to take that bait.
No, I don't want you to take the bait. I actually don't talk about Donald Trump on the program because I find that it's very difficult to do it so effectively and usefully. I mean, a lot of times...
Without having people's blood pressure rise.
And also, I just think most of the commentary around him is not very useful. There is actually, I don't know if you're familiar with Sam Harris, he talks about him too much. I mean, but there are times in which he describes his criticisms in a way that I find useful. But I think for the most part, conversations around him are not very useful. I want to mention one more point on bringing it back to China before we end, which is we were talking about loan growth. I've got two charts here in front of me. One is of loan growth in China, and another one is of percent year-over-year annual GDP growth since 2007. And what is indisputable based on these charts is that annual GDP, the trend for annual GDP growth has been down, whereas right now loan growth looks pretty flat, but it had a huge jump in 2008. You know, are we going to continue to see every year it's going to be much more challenging to generate growth in China?
Yeah, I think if you were to draw that top chart using including corporate bonds and including all sorts of quasi-loans like short-term private equity, then you would find that the two lines are in opposition to each other. And the reason is simply because you require more capital every year to drive the same amount of GDP growth, and you have a target, so you just have to put in more capital. And that's why I think that they're going to hit a wall, because it's very important politically, for whatever reason, to fulfill the promise to the Chinese people that GDP will double by 2020. I guess the starting point was 2010. I don't know. And that what that means is that you have to have 6.53% GDP growth every year. So they're just damn well going to hit that target. And that's unfortunate because the quality of growth, it's kind of like, people talk about digging holes and filling them in again, or building a Mexican wall. But essentially that's what you're doing. You're putting a tax on every Chinese citizen.
Well, supposedly the Soviet Union in its heyday produced cars that had negative equity because they actually had to take the cars apart for the parts. The actual commodity that went into creating the car was worth more than the final product.
Yeah, exactly. And you get a lot of that with Chinese comparisons between, steel that's of less value than cabbage and things like that. Think of the amount of energy and resources that were required to dig all that iron ore out of the ground in Western Australia, stick it on barges, haul it up to China, put it into these towers, and then you're going to... I'll tell you, there's a city in Ordos County in Inner Mongolia, which is the biggest county for coal in China, where their solution to the bubble breaking was actually to blow up the buildings to rebuild them.
That's very funny.
That was proposed. I don't know whether they eventually did it. They ended up with these huge...
There was some similar proposals, less serious, here in the United States. And in fact, I opened one of my early television shows years ago by having a bulldozer bulldozing a house, and it was a mock solution to the housing crisis. The idea was you create jobs by putting people in bulldozers, and then you create jobs by rebuilding the house.
Exactly. They've done that. There's another county in Ordos where they had built all these towers and they couldn't find people to live in them. So they actually, I swear to God this is true, they actually blew up schools in neighboring counties, nobody in them, of course, so that the kids would have to go to that
Are you
county
serious?
to go to school. Yeah.
That's a real story?
Yeah. And then you'd find these kids, squat. Of course, for them, it was a dream because they were living 50 miles from their parents. They're like 14 years old. They have their own little moto scooters, and they're squatting in these like dark towers, with maybe a hot plate, battery run, with 4 students living in this like weird empty apartment together.
Where were they going to school?
In the model school in this new county, because they'd built a model school, so they were damn well going to enroll in it.
I mean, totally insane.
Yeah.
And that is the extreme sort of version of what many in the United States propose. I mean, that's the idea of digging holes and filling them back up. I mean, that's not a radical idea in certain sort of Keynesian circles.
Well, I mean, let's not go overboard. The U.S. infrastructure does look, it is decrepit. People are dying in train accidents. It looks 60 years old because it is 60 years old, whereas in China, it's all brand new, and that's the difference. But, in the same way, if we were to raise $3 trillion to build, a wall around the perimeter of the United States, yes, that would raise GDP. How would that raise the quality of life?
Well, also, but I'm remembering specifically when I was living in D.C. that there were some people coming out in the New York Times saying that the snowstorm would actually be good for the economy because it employs people. It's this asinine idea.
People say the same thing about war all the time, whereas Adam Smith believed that defense industries should not count toward GDP because they were detracting from GDP.
From wealth. They destroy wealth.
Exactly.
Yeah. I mean, and that's, I think, something that many people fail to recognize, that, again, we talk about Goodhart and the notion that just because we can measure GDP doesn't mean it's a useful measure for any of the things that matter to us. And we could be growing an economy just like we could be growing cells in our body, but whether those cells are malignant or benign is a completely different question. And I think that that's what's so frightening about, to me, looking at China, looking at these ghost cities, these hundreds of ghost cities. It's just this terrifying, the fact that they've deployed capital, resources, and labor to generate massive amounts of so-called wealth. But in fact, in a contraction, it could turn out to be that huge amounts of land that was once arable is no longer arable because they've built slabs of concrete on it. They've polluted their environment tremendously. And it's just a frightening sort of, picture. I think in some ways the Chinese economy, to me, is sort of a national representation of the human animal. In some ways, very out of balance with its ecosystem. I think it represents in some ways what we do collectively to the planet. Maybe I'm going off the rails a little bit, but it sort of reminds me of that in a way.
No, I understand what you mean. I think, to me, it's a representative of how political systems excessively centralized go off the rails.
Yeah, no, I agree with that as well. So, Anne, it was great having you on.
Thanks, Demetri.
Thank you.
And that was my episode with Anne Stevenson-Yang. I want to thank Anne for being on my program. Today's episode was produced by me and edited by Stylianos Nicolaou. For more episodes, you can check out our website at hiddenforcespod.com. Join the conversation at Facebook, Twitter, and Instagram at Hidden Forces Pod, or send me an email at dk@hiddenforcespod.com. Thanks for listening. We'll see you next week.